All right, so in this video, let's put it all together. This is the main income screen, and I'm going to scroll down to the business section again so you can see what it's like when we come out and go back in. So I'm going to go ahead and click Edit next to the Schedule C. And again, I only have the one business. I'm going to click Edit on the business that I've walked through setting up with you. I'll scroll down. You can't see. I'm going to click Continue. Now, this we went through in the last income video, right? It's assigned to this business. This was where we left off after the income video. And this was the next screen. Do you want to enter vehicle expenses? So this is a super common write-off for self-employed business owners. And I'm going to go ahead and click Yes. So the first key is that you have to actually own your vehicle, and the software is going to ask us about that vehicle first. So I'm going to enter my vehicle, whatever you remember. Most people will be an automobile under 6,000 pounds. I know that question often confuses people, but that's the most common. In my case, I have a truck. And then the date, place, and service means when you started using this vehicle for your business. So you might have bought your vehicle before you even started your business. And then, so generally this is either when you bought your vehicle or when you started your business, whichever was sooner. And then an important concept for taxes is consistency. So the nice thing about using the same account is all this information will carry forward next year. You won't need to enter the name. You won't need to enter the date, place, and service. But if you do switch softwares or use another tax preparer, this is all information you want to give them. So we didn't sell it in 2015. And the next step is entering your miles that you drove during the year. And there are two categories for ways of calculating a deduction for your vehicle use, because this is one of those pieces, expenses that is both personal and business. It's your car you own. You use it for personal, you use it for business. So we have to come up with a deduction, allocate costs somehow based on the business use over the total use, which gives you a percentage, right? So we'll enter, you want to keep, so first of all, you need to keep track somehow of all of these miles you drive during the year. And of course, starting this year, you might not have kept track. So you want to find a way to back into what your miles were. And I'll explain this for going forward. I recommend keeping a mileage log, or even easier, using an app to track your mileage, which Mile IQ is one that I'll go into more with a training. What you're supposed to have in a mileage log, if the IRS ever audits you, is your actual odometer readings for every trip you drive, the business purpose of all your business miles, your personal purpose. I'm sorry, you don't need your personal purpose, but just identifying which miles were personal, which miles were business, and including the business trip, where you went, why you went there, and the total miles of each trip and date of each trip. So it's a bit of information. You can, you're not supposed to use any estimates here, but of course, I have not met many people who actually use a mileage log. I will talk about all of this more in the write-off video in this module, but go ahead and enter your business miles. Watch that video if you don't have this information. I'll go into more detail, and I'll enter some of my business miles and my personal miles in here. And the next question is, was this vehicle used for hire? And that's asking if you did Lyft or, a taxi service of any type. So no. Do I have another vehicle available for personal use? Yeah, I have a roommate who has a vehicle. I have a friend, a boyfriend. Was your vehicle available for use during off-duty hours? That's referring to my business hours. So yes. Do I have evidence to support my deduction? Yes, I do, because that's required. And is my supporting evidence written? So mine is not written. Mine, I use that Mile IQ software. So mine is electronic. So I'll say no. It's perfectly fine to have a written mileage log. That's actually the very common way to do it. Just throw a notebook in your car and start writing that stuff down. But honestly, Mile IQ is super easy too. So, all right. All right, so was I a more than 5% owner of the business? Yes, I 100% own my self-employed business. And the last question, do I own or lease? So I own, of course, and then from here we'll continue. All right, so all that information was just about the vehicle. This is where we choose the method we want to use to actually calculate the deduction related to the driving we did for our business. So you can choose the actual method or the standard method, and I usually recommend the standard method, which will just be 54 cents per business mile we entered in the previous screen. Now, regardless of which method you use, there are some additional expenses you can write off. Parking costs, tolls, property taxes. You'll find that on your vehicle registration. A portion of your vehicle registration in about half the states is allocated to property tax. So that amount will go there. The car loan interest you paid, if you have a car loan, you can put the total amount for 2015 here, and then it will take a percentage based on your business miles divided by your total miles you drove during the year. And this brings us back to a summary screen for our vehicles. So we could add another vehicle, if we sold one during the year and then purchased another vehicle that we use partly for business. And a theme you'll notice, we keep seeing this setup, right? Where you added your business as a Schedule C, there was the option, it looked just like this, and you could add another business as well. So next, it's asking us about our self-employed health insurance. I did not have coverage through my business, and I did not have the marketplace business insurance. So just to let you know, they'll ask about the shop marketplace insurance in the personal area as well. So don't let that confuse you. This is asking specifically if you set up insurance through the marketplace for your business. You might have done it for personal. Don't enter that here. Enter that. We'll go through that in the personal module. The next question is, did you pay long-term care insurance? And now we'll come to the home office information. So this is a common deduction for self-employed to have. I even have a specific video on it. All right, so we said yes. Enter a description that you'll remember for your home office. And then there are two methods to calculate. One, the IRS just started it a few years ago, the simplified method. And you see when I just selected that, it took away all of those additional options. And I'll cover all of that. There you go. You can see them come back again. So this is all the more additional information that needs to be entered when you use the actual method. So the IRS created the simplified method to make things easier so you don't have to keep track of all this stuff. But if you may come up with a much higher deduction this way, so watch the other video for updating this and going through all of this if you're interested in that. Otherwise, I'll continue entering the simplified method here, and we simply enter the square foot of the area used for business. So this could be a room in your house, or it could simply be an area in your house. And then the total square feet of your home. It still asks for this, even though it's not going to go into the calculation when I'm using the simplified method. One thing to note, I'll just go over the requirements really quickly. For your home office to qualify, it must be used exclusively for business. And then it must either be your primary place of business or if you have another business location, like you rent an office or a store, or you mainly work at your clients' locations, then you must at least do management activities, and it goes based on, that higher level activity at the home office. So generally people do qualify for this, but it's important to know that those are the two requirements, and I'll talk about them a little bit more in that home office video as well. So this is just a summary screen, and we'll continue to the next write-off. Next we have assets, and with assets, they are anything that we buy to use in our business for more than a year to generate income. So it's not items that we're buying and then selling to customers. It's stuff that we're using to make income. So this could be furniture in our office, or a laptop, and of course the vehicle. Under the vehicle write-off, when you do actual expenses, takes depreciation. Same with a real property like a building. So with assets, you don't get to write off the full amount you paid, because these items will provide value to your business over time. You follow IRS depreciation rules. So if you had anything that falls under that category, refer to the other video, pause this and go watch the depreciation video in this module, and that will walk you through saying yes here and entering your assets. But because it's a longer process, I'm going to say no and continue to the next section. All right, so we're almost done. We are now to the meat of business expenses. This is where most people will enter most of their expenses. So advertising, commissions and fees, contract labor. That is if you paid people, anyone other than a corporation, over $600, you'll file the 1099s. That amount, you add up the total you paid people, that's contract labor. So I had some of that, I'll put in here. Depletion is uncommon for self-employed. We have insurance, that's common. Now, if you had employees, there's a few lines related to employees. Legal and professional services, very common if you hired a lawyer to form your business, or a CPA, or tax advice for your business. Office expense, now that's a very common one that nearly all self-employed people have, especially if you took a home office, right? Paper, files, pens and pencils, that sort of thing. Nearly everyone has some of that in their business. And if you're not keeping track of write-offs, I urge you to, because in general, most people have more than they find when they're estimating or trying to come up with those numbers at the end. So equipment rental can be common, rental cars, other rent if you rent space, repairs and maintenance if you have any sort of equipment, tools, even computers, that sort of thing. Supplies, when you think about supplies for what you do, even if it's just a service, any sorts of stuff, think of supplies more related to what you do as opposed to office expense. Now, taxes and licenses, often whatever your specialty is in your industry, you'll pay some sort of license or have, ongoing education. And these are pretty self-explanatory. Now, wages is related to employees, but utilities would be directly related to your business. And now meals and entertainment is one I really like because nearly everyone has it, but it can be one people are scared to take. And as with all business expenses, it's really just about keeping the records that are required by the IRS if you're ever audited, and they're really great business practice as well. So the first box here is really for when you go, when you spend money on meeting with a client, and maybe it's over coffee or dinner or some sort of similar entertainment type item. And those expenses are limited to 50%. And what you want to keep for documentation, and I recommend just writing this on the back of your receipt right when it happens, is who was there, whether it was you, the names of the people you met with, what the business was, and how you expected to generate income from this meal or entertainment. And you don't have to actually generate income from it, but how you expected to, or what was the nature of the conversation. Something a little bit more detailed than normally required for business expense records. But in general, the IRS does require that business expense, as I discussed in the overview video, that general requirement for business records. Now, this third line down, the second line is very specific to Department of Transportation. That's what DOT is. And if you have that, you'll probably be aware of it. The third line down is 100% deductible, not limited to this 50% rule. And that is when for business, so like I worked with a hiking company and the meal was included for the customers on trips. And so that sort of thing, when it's part of your service, it's 100% deductible. And that's where you'll enter it on the third meals and entertainment box. Just to be clear, when you purchase food for yourself, like for lunch or breakfast, that is never deductible. It has to fall under one of these categories. And so lastly on this page, we have the miscellaneous items. So if you have some amounts you kept track of, you can label it in the description line and then enter the amount over here. And you want to be... you want to put things here that do not fall into another category, but in general, you don't want to use like miscellaneous as a description. You want to provide a little bit more detail, even if it is maybe a miscellaneous category in your records. Provide a little more detail about the nature of your work. You can still be vague, but just give that general description. All right, and from here, take a look at your federal amount, and then when we press continue, that amount should adjust substantially. All right, so this was a monster video. We're back to the summary screen for Schedule C, my one business, and when we continue, we'll be back at the income screen. So congratulations. This is really where the meat of your business, keeping track all year, and where it all comes together and you get to see how much you spent, and you can really turn taxes around from something that's dreadful and avoidance and a lot of stress to something that's a nice review of your year in business and how you want to improve for next year, and seeing the money that you're putting into the economy. I mean, it's really cool. And the more you start to take control of your records and understand all these deductions, you'll find you have way more write-offs. So from here, we're almost done. We'll continue through the modules to finish your return, but you're almost there. This was the meat of the work, and none of the other videos for entering or even about the different write-offs and additional pieces are this substantial. And definitely let me know if you have any questions about any of these write-offs, and I'll be adding to this section all the time based on people's input and questions. So I'd love to hear from you. Head over to the Facebook group and let me know you finished this monstrous section and the majority of your taxes, or finish through and get it all done, and then come let me know, of course. All right, you're doing a great job. Thanks for watching, and I'll see you shortly in the next module.